Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Ian, thanks for having me back, Jim.
Ross, the number one trending topic outside the pandemic is whether Canada's housing market will crash or experience a V or U-shaped recovery. Does your firm have a clear picture of the road ahead?
We have a clear picture on the road ahead, Jim, as of 4:43 Eastern Time on April the 29th here, 2020, which is just the moment we're talking in today, the moment we're recording the show. Things change so rapidly, Jim, that if you can't adjust your forecasts to reflect every single change that is happening, your forecasts are always going to be proven to be incorrect or off. What you can do is you can understand how a housing market functions. You can understand how the public interacts with that, the outcomes of how it's functioning, and then you can predict with a high degree of reliability, even in an environment like today. Normally you can predict with, long-term trends very easily. But even today, where everything is changing, week by week, day by day, you still know what's going to happen as you come out of this. We've been reading about these V-shaped recovery comments from economists, both in the United States and Canada now, for, I guess, 2 months. We've heard politicians talking about it this way. We've heard provincial finance ministers talking about it this way. Federal governments finance ministers talking about it this way. Lenders, the economists at the banks talking this way. Real estate associations, presidents talking this way. Marketing consultants, the non-registered staff they use to hide their legal obligation to provincial trading regulation. They're all talking this way. What I can say to your listeners, a V-shaped recovery has never happened in a housing market, even at the best of times. When you look at a historical context of all the real estate data that's available, and you read it the way that we read housing market data, you see a V-shaped recovery has never happened. But there are instances in a recovery where stakeholders in the real estate industry, in other words, those who profit from the sale of homes, take advantage from people. And they rely upon all of the current housing market metrics, hiding the reality from the public. They're just relying on it being hidden. And since the public doesn't have access to it, they don't understand how to read the information that's available to them, because it takes decades of understanding to be able to do so. They're easily misled by those commenting in the market. So I'll let your listeners have a little bit of an understanding of what I'm talking about here. In the 1990 correction, the great housing correction of early 1990s in Ontario, okay? We are talking a magnitude of correction that caused people to have their homes foreclosed on. We're talking a magnitude of correction that it took 18 years before peak price was reached again at an inflation and quality adjusted level. 18 years. We're talking about a correction of a magnitude that people couldn't move from their existing home for up to 15 years because they weren't paying down their mortgage at a rapid enough rate, or because they were no longer able to benefit for house price gains. During that period of time, Jim, during that period of time, on the end of December of 1989, the Ontario Real Estate Association reported the average sale price of an Ontario home was $180,000. $180,000 is what they had reported. That was a huge gain over the previous year, because in December of 1988, it ended at under $160,000. So you had a $20,000 gain over that period of time, basically 15% in that one calendar year. They were claiming it was false, it was misleading, it was deceptive, but they claimed it. If you go back in all the real estate graphs and charts that exist for that time, that's exactly what it shows you. Now, the following year, so we go from December of 1989 at $182,000 to December of 1990, where the Ontario Real Estate Association reported the average sale price had dropped to $173,700. Okay, so it had dropped a grand total of $8,411. $8,411. This is what the real estate board told people. Prices had only dropped 4.6%. Now, how do you get a drop of that? You get a drop of that magnitude over a calendar year of seeing housing prices in the Greater Toronto area decrease 30%. Real housing prices, identical house selling in 1989 versus the identical house selling in 1990 was 30% less. Yet, organized real estate said housing prices in Ontario had only dropped 4.6%. Oh, where did all those massive declines go? Because the declines kept going. The following year, in December of 1991, organized real estate in Ontario reported that housing prices had only dropped less than $2,000 over the course of the year, $1,800, where real-world house prices had dropped another 15 to 20%. What I mean to say by that was houses that I was selling in 1989 at $240,000 could now be purchased for less than $160,000 in that short period of time, where organized real estate was claiming housing prices had only dropped 4.5% the first year, and barely 1% the second year of 1991. Now, what your listeners also should understand is, in the spring of 1991, this is where I got my wake-up call about what organized real estate and the economists believe. You see, in March and April of 1991, the Ontario Real Estate Association and the Canadian Real Estate Association reported that home prices had actually increased. Home prices year over year in March and April of 1991, while real house prices were off 30%, were claimed to have increased by those two bodies. You really can't make this stuff up. The public believed it. So, what was really happening in the market, people didn't ever see. And if you go back and you look for all of the old housing charts on the housing correction of the early 1990s, you'll never see the damage that was done on the ground. Why? Why was that damage never shown in Ontario? Why did the following year, in 1992, how come the prices dropped $10,000 that year when the Ontario Real Estate Association was telling everybody in the spring of 91 prices were going back up? It's because they don't measure house prices. What happened in 1992 was there was a change to the home lending infrastructure in Canada. That change meant in the province of Ontario, the maximum home you could buy was about $10,000 less. You could have about a $10,000 smaller mortgage. Well, guess what happened? Home prices dropped $10,000, supposedly. They didn't drop $10,000. It just meant people went out and bought a house that was $10,000 cheaper, a lower quality of home, a home that was $10,000 lower in quality. So the changes that you see, you are never recorded in the data. It's because the way stats are created to represent a housing market to allow commissions to continue to be earned. So the V-shaped recovery myth, the U-shaped recovery myth, actually was an L in Ontario. It was an L that started with a big drop from the fall of 1989 through to through to 1995, and then it was a long, slow, barely perceptible leg turned slightly upward in an L shape all the way through till 2008, which we know what happened in 2008. Another correction. That correction was hidden again. The recovery was misrepresented as a V there. Didn't happen. If you're working on the ground with homes and home owners and home buyers, you realize this was simply impossible. That's not what we're seeing on the ground. So, when they're talking about a V-shaped recovery in a housing market, what they're really saying is this. They're saying that home buyers will be able to spend more money just as rapidly as they're going to quit spending it now. Well, guess what, folks? They're not going to quit spending the money. If you still have a job and you're still in a position to buy a home, you're still going to buy a home for the exact same amount of money you would have paid a year ago, or you will pay 2 years from now. There are only a few levers that a government has at their disposal where they can manipulate the public into taking actions in a housing market. Very, very few levers. Those levers decrease over as the longer a housing market is headed on an existing path. There are people who still believe that the British Columbia housing market has not been correcting since the fall of 2015. There are still people in Ontario who believe the Ontario housing market has not been correcting since November of 2016. There are still people in Quebec who are believing the housing market in Quebec has not been correcting since the spring of 2017. There are people who are still believing in Alberta that the housing market didn't start correcting in the fall of 2012. So when we're talking about the shape of an economic recovery that is reliant upon wealth, in other words, the wealthier Canadians are, the more money they're able to spend, the more home equity they have, the more they're able to leverage that equity into debt, which in turn they're able to spend. That is not going to exist. It's going to take a long period of time, or it's going to take a radical change to the home trading infrastructure in Canada that would allow that to happen again. I don't care what anybody else says. I'm sitting here with the data before me, and I just quoted you how 50% house price correction in Ontario in single detached homes in the GTA, the largest housing market in the nation, no longer appears in the charts. It's disappeared. When the reality is, families experienced those kind of declines. You were asking about a recovery that is not where we don't have natural resources as a way to get us out of it. The Canadian government decided years ago they were going to shut off the pipes in Alberta. The Canadian government decided they were going to weaken our mining sector. The Canadian government decided that they were going to allow interlopers to harm our agricultural business. The influences from other countries on the Canadian psyche, the attitudes of our politicians, the beliefs, have all acted in the exact same way to remove the power of our country in getting out of a recession through the selling of our natural resources, whether it be lumber, whether it be oil, whether it be agriculture. That left housing, okay? Housing is no longer a way to pull us out of this recession. So, you may hear stories from your local real estate board that the markets are recovering. You've heard them in British Columbia for 2 years. The data shows otherwise. And if your listeners take a granular look at the housing market on these sites that have sold lists, they can see every word that I'm saying to them is true. The recovery will be nothing like anyone is forecasting, because from our perspective, which is strictly housing-based, there is no way that you're going to get that ocean liner up to full steam again quickly enough to form a V or a U.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross is a sale rep. Back in May of 2013, you called the Canadian housing market as entering a correction. That correction never happened until maybe now. How could you have missed that call 6 years ago?
How could I miss that call? Well, how could I miss that call is because I was naive, Jim. I didn't miss the call. So I'm not agreeing I missed the call. What I'm agreeing is I was naive enough at that time. Remember, I was still a sales rep at that time. I'd still been living in the world of organized real estate at that time. I had certainly found things that were wrong with the industry, like quadruple counting single sales. I certainly had been fighting against changes that were coming into the industry, and certainly the last probably 3-4 years of my career as a sales rep was dedicated to that. But I wasn't wrong when I made that call in May, because in June and July, that's exactly what happened. What I was naive about, Jim, I couldn't have guessed that a new Bank of Canada governor was going to be installed in June 2013. So that's what I'm going to say to your listeners. I was ignorant to the replacement of Carney by Pola's was taking place. I was too focused on debunking Canadian Real Estate Association housing stats, debunking multiple counting single sales, fighting with the chief economist, Greg Klump, at the Canadian Real Estate Association, fighting with organized real estate to stop technological innovations they were trying to implement at the time, which again now, 6 years later, I've been proven to be correct, because I critically assessed ideas that they were putting forward. And I could see the risk and the ways that others could take advantage of those technologies. So again, 6 years later, it's proven right. Now, in this case, it's a little bit different, because in May of that year, we have used a way of recording housing activity for a very long time. My family has used it for a very long time. It is evolved over the 2 decades prior to me coming out with that response. It became highly accurate over that period of time. And on the May 24th weekend, we recorded a drop in activity that we had never recorded before. What I didn't know was we've got a new Bank of Canada governor coming in June, and that he would either ignorantly or incompetently drop interest rates. I didn't realize that CMHC, for the sake of the argument, believed the Canadian Real Estate Association when they reported sales. That meant because 2013 was the very first year for sale by owners began to be counted by organized real estate as in their sales counts, that it would reach enough in July of that year where organized real estate could claim, oh, the previous 14 months of correcting housing market had stopped because we just reported a year-over-year gain in sales. I'm sitting there dumbfounded. Wait a second. You're now counting for sale by owners where you weren't counting them for the previous 50 years you've been in business. Shouldn't you tell the public that? No, they didn't tell them. The Bank of Canada governor, Pola's, newly enshrined, clearly wanted to stimulate the economy. He did that by dropping interest rates. He was ignorant to the consequence of that drop, which was people could afford to buy a more expensive home, which that fall they did. I mean, in 2013, in the province of Ontario, October of 2013 had the highest average selling price that year. You have to go back. The May number that they quoted was wrong, was subsequently corrected. So anybody who's looking at uncorrected data, you may have this mistake. But October of 2013 reported the highest average sale price that year. It had nothing to do with home prices increasing in price. It just meant that Polaz's drop in interest rate meant that if you're actively looking for a home to buy, you could buy a more expensive home and still have the same monthly payment. So what did people do? They bought a more expensive home. Who wouldn't do it? You can have this brand new Lexus for the same price you can have this Toyota. What are you going to buy? Well, I'll take the Lexus. It's going to cost me the same. It's not going to cost me anymore. Why wouldn't I take the Lexus? Which is exactly how people buy houses. And that's what people don't understand about that period of time. Now, what happened after that was a series of events that came home because of a result of changes that have been made to the reporting of stats by organized real estate. Organized real estate's marketing executives, the non-registered staff, the people who your local real estate regulators could not charge, learned in the 2008 to 2010 period how they could manipulate the media. They were watching it live in real time. They would make an announcement, and the media, in such a heat to report the news, be the first one in to report, they did no critical analysis of the reporting. And we saw in BNN, housing prices have gained. No, they hadn't. What are you talking about? On the ground, housing prices hadn't gained. But that's what they were reporting. Globe and Mail reported the exact same thing. A new house price index came out in 2013. Another new house price index came out in 2013. Caranet National Bank house price index came out. The Canadian Real Estate Association, MLS HPI, came out in 2013. This culminated in the fall of 2013 of totally misrepresenting the housing market to the Canadian public for the benefit of organized real estate, who wants more and more and more and more sales every single year. That's all that they want, is sales, 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 sales. Because that's how they make money. They don't make any money if you don't buy a house. So it all happened at that one moment in time. 2 new house price indexes were released. You had the counting of for sale by owners on the national MLS housing counts, where they were never counted before. You had a change in the Bank of Canada governor, who then dropped interest rates, which organized real estate misrepresented to the public that house prices had started. And the whole ball started rolling. And what we watched take place until the spring of 2016 was unbelievable to watch. But let me tell your listeners this. From my perspective personally, that was only 3 years. That was a 3-year window of learning how the Canadian public is manipulated by organized real estate, how governments around the world have been manipulated by housing market stats. I'll leave this topic this way in terms of how I answer this question, Jim. The United States of America has their comparable CMHC called Fannie Mae and Freddie Mac. Okay. Somehow, organized real estate convinced the mortgage default lending insurer in the United States that a buyer and a seller are more qualified to determine the value of a home than a professional appraiser is. They have convinced the mortgage default insurer, somehow, they convinced them that a buyer and a seller know more about the price of a house than a professional real estate appraiser who visits the home and completes a professionally presentable in court opinion of value on the property. They convinced them so thoroughly that housing authority in the United States of America actually has documentation where they claim appraisers are stupider than a buyer and a seller. They are incompetent. It's better to get a valuation and to lend money on the opinion of a buyer and a seller who probably haven't had a real estate transaction in 20 years in the United States versus a professional real estate appraiser who appraises hundreds of properties a year. Somehow, that's right in their own documentation. This is why the public believes what they believe. This is why the correcting housing market that we had announced in May of 2013 as over. In other words, the housing market had already been in a contraction for over 14 months. It was now reaching bottom, got a boost through fake stats. We're going to start counting for sale by owners in June. Guess what? We got an extra 400 sales. Year-over-year sales increase. Bank of Canada got new governor. Clueless to what's going on. Reduces interest rates. Guess what? Home buyers say, hey, I can buy a more expensive home for this exact same monthly payment. I'm going to buy it. I'd be stupid not to. Yes, you would. Go and buy the more expensive home, which is what they did. Organized real estate says, guess what? Housing prices went up. No, they didn't. Those people bought totally different houses. So the call in 2013 was correct. It was short-lived. The correct call only lasted for about 4 months. Because when I look at the data, I say, where did the change take place? The change took place in October of 2013, right when interest rates dropped. That was the month where it was in October in a year where the highest average selling price in that year took place in October, something that never happens in the province of Ontario. And then I looked to where did this come out? Well, the following spring, January, February, and March. Because in those 3 months of 2014, so less than a year after I made that call, sales did not increase one. There was not one additional sale added to the Ontario sales count. Not a single one. But at the same time, housing prices had jumped, supposedly, the way Organized Real Estate reports it, $22,000. Because in March in that year, the average selling price that month hit $436,000. In April, it hit $447,000. In May, $448,000. But guess what? That October never hit those numbers again. It was only that 1 year, 2013. So when you hear that Governor Polaz is not going to be rehired to get us through the outcome of this pandemic, you have to ask yourself why. And my answer is this, because I have to look at I have to critically assess what I'm looking at. I have to look for scapegoats. I have to look for deception. I have to look at potential blame. And when I look at October of 2013, spiking of house prices, I have to say what took place from May of 2013 till this pandemic hit was solely the result of the Bank of Canada's and CMHC's. So Polaz and Sidel, everything that has happened to this country and is about to be unleashed rests on their shoulders. Their refusal to do the basic questioning of Organized Real Estate's sales stats. Yes, after we told CMHC CREA doesn't count existing sales, they removed that one heading from their charts and replaced it with MLS. So that one change, yes, one change. But all of the other damage, all the other miscommunication, all the other falsehoods the Canadian public has been allowed to believe rest on the shoulders of three men. Polaz, Sidel, and Klump. Klump is gone. Klump left Korea in February. Polaz will be gone. Sidel's the only one left. You can be sure he'll be gone next. I'm just saying, yes, the housing market was in a full correction in May of 2013.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay, Ross, much has been discussed about Canadians' indebtedness and the ability of lower interest rates to assist them in spending Canada out of this lockdown. How does your firm view that?
Okay, so this sort of goes back to the previous question that we had about the V and U-shaped recovery, because I think I touched upon this in that answer, Jim. Canadians' indebtedness is nothing the way that is presented by economists around the world. So let me be perfectly blunt about our assessment, my firm's assessment of this topic. Canadians are no more indebted today than they were when I started selling real estate in 1987. What's different is we calculate indebtedness totally different than the world economists calculate indebtedness. We calculate indebtedness, how much people owe, by how much they're going to have to spend to get out of debt. And when you understand that the way our system is built, in other words, when you understand how the CMHC, the OSFI has created rules for this that CMHC then follow, which impact mortgage rates at the Bank of Canada, which impact policy decisions by the federal government. All of those things work together. And all of those things working together tell you that the average Canadian family in 1987 buying a house was indebted exactly the same as the average Canadian family who was buying a house in 2020. Exactly the same. What's the difference is the expected cost of ownership as a percentage of your income is exactly the same. In other words, how many years of your income the income that you had on the day that you owned your home for the first time, what are you expecting to spend to pay off your house, pay off your debt, improve your house, keep it in top-notch conditions? That number has never changed. Well, why has it never changed? Well, because CMHC would lend you a mortgage for 32% of your income in 1987. Well, because Canadians were buying houses at 32% of their income in 2020. Didn't change. What changed is the amount of interest payable. Two totally different things. So our discussion indebtedness is totally different. So that also means our answer on this is going to be from a totally different perspective. The ability to lower interest rates to assist them in spending. Well, the way that we look at mortgage debt, we look at it, how much lower could the Bank of Canada drop rates? We're already at 0.5%. Well, let's say for the sake of it, they drop to zero. Okay, now that means that the banks technically could lend a 5-year mortgage at 1.5% if they so desired. 1.5%. Oh, gee, Ross, doesn't that mean that people can get more indebted? They can take on more debt because they've got the income to cover it. And our answer would be no, because there's this funny little lever that the OSFI put in a couple of years ago called the mortgage qualification rate. And that removed levers the Minister of Finance has. So the question that you asked me, Jim, really has to be answered this way. Here's the answer. Will the Government of Canada remove V20? Will their need to stimulate the economy by stimulating housing debt, creating house price illusion, be strong enough that they'll convince the OSFI to change that rule, drop that rule? Will the Government of Canada say, you know something, if the Canadian Real Estate Association says, hey, you know something, if you increase the amortization to 30 years or 40 years, that means more people are going to be able to afford to buy a home. Will the government believe that nonsense and agree to do it? Well, they very well could do it. And in the short term, for a 12 to 18 month period, there could be a benefit. If they are foolish enough to do that, though, the day of reckoning is simply pushed forward a little while. And when that reckoning comes, as it is happening right now, it will be far worse then as it is right now. Had poll laws back in 2013 remained firm on interest rates, had CIDL and CMHC called out the Real Estate Association of Canadian Real Estate Association for misrepresenting for sale by owners being counted as this increase in sales, that would have been halted. Had the banks not been the predatory lenders that they became, capitalizing on a credit score to gross debt service ratio advantage that the wealthiest of the country could access. Wouldn't have happened. All of these factors come in together. We're in a situation, Jim, where a simple lowering of interest rates will make no difference. But if you go back to 40-year amortizations on mortgages, if you increase the homebuyer RSP homebuyer plan, if you remove the mortgage qualification rate or reduce it, if you allowed organized real estate to tell everybody falsehoods about how housing prices increasing to create fear of missing out, yeah, you probably could get a short-term swing off of that. But this is how we see it. This is how we view it. Every time that has happened from 1982 forward, it has a limited length of time that it works until the home trading infrastructure no longer can support further change. That requires another change in policy to take place, whether it's reducing interest rates, whether it's extending the amortization, whether it's making something tax deductible, whether it's increasing the home buyer protection plan. All of these things. Those things are no longer available. And when they happen this time, if they do happen, they will be obvious to the Canadian public when in the past they really weren't obvious. I mean, most people don't understand when Flaherty increased amortizations to 40 years to get us out of the out of the Great Recession. He did so knowing he had to remove that because of the damage it was done. And he acted to remove it. And when the new Liberal government came in, their need to get reelected caused them to start being price inflationary policies on the housing market to return. When Flaherty did that, there was very little, the public was not using iPads and smartphones as we are today. Social media wasn't as dominant as it is today. I mean, it wasn't even as dominant in 2013. But today, everything is there to see in real time by the Canadian public. And if a government now acts, we have the freedom to speak. I'm not just saying the public, I'm saying Ross K. Realty Consultants has the freedom to speak. We didn't have that freedom up until 2 months ago. 2 months ago, we were given the freedom to expose the con that has happened to the Canadian public. The data which proves that con took place is available. There will be no escaping it should they want to foolishly ask Canadians to take on more debt to get us out of this situation. We are going to have to weather it the same way that Ontario families weathered it throughout the 90s all the way till 2008. That 18-year period that they had to weather the market. They had to use prudent personal household finances to be able to go out and buy a more expensive home, trade up. Builders were not able to take record profit when they built a new house. They had to be happy with a reasonable profit that was sustainable instead of greedy to try to reap. I'll leave your listeners with this thought today. The largest home builder in Canada, Mattamy Homes, the owner of that firm left the business in 2018. His interview is still on, didn't leave the firm, said that he was going to move out of the housing space. Go on BNN and find his interview. There's a brand new hospital that has his name on it in Oakville, Ontario. He moved out of the market in 2018. He started the market in 1988. He was caught once already. He didn't get caught a second time around. This time around, all of the data, all of the housing market metrics, everything is available for the public to see.
Ross, thank you so much for the update.
Thanks a lot, Jim.
My guest has been home ownership consultant Ross K. from the wealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.